What's up, y'all? Happy Sunday. This is Rich Dad reporting live from wherever it is that I am. This is Sunday, May 31st. It is 7:50 p.m. my time. Um, Asian session. Market just opened. Y'all gotta hold on. Y'all know I need my theme music. Hold on. Yeah, I'm rocking with the braid. Yeah. We pay. Yeah. We pay. Song of the week. Okay, guys. So, what I'm giving you guys here is my personal forecast of the recovery of whatever it is that we are currently in right now. Okay. Because in order for it to be a recession, then we have to have two consecutive quarters in the black. I'm sorry, in the red. Well, we've already had an entire quarter in the red, and we don't know if we're approaching another one. But if this was not a technical recession, then it was most certainly a crash and a tragic time for many Americans. Okay. So that's why I'm calling this the recovery. All right. Now, anyone who knows my personal style, especially the people in my group, Wolfgang, okay, you guys know that we trade based off, well, we let the fundamentals guide us and we use the technicals to keep us on track. All right. Now, fundamentally, whenever there is a recession or a crash, there is a certain type of recovery that occurs. Okay, you have different type of recoveries. A V-shaped recovery, which would be something like this. And keep in mind, guys, we are on the 1 day time frame. Okay, so a lot of economists and finance experts, so to speak, were saying that we were in a V-shaped recovery, but that is something that has never happened before. And though we are in historic times, I highly doubt that a V-shaped recovery is going to occur at this moment. Okay. Being therefore, I am predicting a W-shaped recovery, a recovery in shape of a W. And the letters, the V's, the W's, the J's, whatever it is that we're predicting, these are in terms of chart patterns. Okay. So as of now, as you guys can see, we are in the V. All right. We are in the V. And first, let me back up. As far as support and resistance, anyone who knows how Rich Dad trades knows that this white line here serves as our support and resistance, the 200 EMA. And the orange line here is our strength indicator, the 50 EMA. Okay, so let's keep that in mind. The white line is used as our support and resistance. When price is above it, it is support. When price is below it, it is resistance. Okay, and the yellow line here, our trend strength indicator, that's what I like to call it. This is something that I just personally like to use. This helps us determine the strength of the trend. So if this line is moving in the same direction of price but not touching, it is telling us that the trend is strong. However, if the trend line is touching price, it means that price is ultimately consolidating or ranging, which is what I have here. And we'll come back to that. Now, again, I'm showing you guys a W-shaped recovery. This is where we currently are here. You guys following my white little finger? This is where we currently are. Okay. Now, if my predictions and if history serves us correctly, then price probably won't be going further before we hit another crash. Not much further, okay? As you guys can see, I have this trend line pointed at 3174 for the S&P, okay? 3174. And I think it'll get there by June 11th, really within the first week, okay, of June. And after it hits this price, I am saying that it's going to drop. Now, it's not going to get as bad as it did here back in March when we first experienced this pandemic. How because we have other things in place as far as stimulus and unemployment, right? To protect the economy. However, it is going to drop because the stock market is in fact overinflated and overvalued right now. Okay? And it just has to drop. So I'm predicting for price to go to 2,600 around this area here. Okay? This is my personal prediction that it is going to drop here sometime within the month of June. And our final recovery will occur towards the beginning of July, where the market is going to have a continuance of a continuance of an uptrend. Okay, but we're not going to short. Even though I'm confident that the market is going to crash again, we're not going to short until we see divergence, price rejection, consolidation, and then the reversal. Okay, which brings us back here. I know you're wondering, what is this? Rich Dad, why do you have this here? And it's orange for a reason. Well, here, guys, is where I mark where price was ranging for practically an entire month, for over a month. Okay, price was ranging. And once price finally broke out of that range, it rose about $100 and we're still in an uptrend. Okay, but if you look at our friend, our relative strength index, the RSI, you can see that S&P is overall overbought, which means that our reversal should be occurring soon, right? Unless price just gets us out of these overbought zones temporarily just to go right back up. However, the reversal will come. It's a matter of when It's a matter of when, okay? And it's also a matter of our positions. That's why we have to be smart about what it is we're going to do. We got to get in and we got to get out. Now, let's just look at I'm sorry, I want to go back to reiterate what I was saying about the ranging price here. Price was ranging for nearly a month, okay? Price broke this range and started rising up. I'm predicting that it's going to go here where I have it marked, right? Now, after it becomes overbought, so much so that we're going to crash again, I'm predicting for price to go here. And the reason for my prediction for price to go here is for the simple fact that the price has to drop below the range. And the market range around the entire around this entire time from mid-April to mid-May, well, the low was about 2700, okay? 2700. So we know price is going to break below this range here because this is ultimately serving as support for us right now. So during the crash, price is going to break through all of these forms of support, including this range area. And I am saying that it'll stop somewhere around here, 2600, because it really doesn't make sense for the market to drop back down to 2200 again because we have other things in place and now we're more prepared for it. So I just want to show you guys how it looks on a 4-hour chart, and I'll let you know that it is a lot much more noise if we look at it on the 4-hour chart. That's why even though we do a lot of intraday trading and mostly scalping, I wanted to show you guys this on the 1-day chart, okay? Because this is what we're using to decide our positions. And see, let's just look at the 4-hour. See here, you guys can tell that the 4-hour chart doesn't look as pretty as our 1-day chart. Okay. However, we still get a pretty good visual. That is our range there. This is our trend line that we're predicting for price to stay above until we crash. So even on the 4-hour, we know that if price breaks below our trend line, then this signals um, a sale, whether it's a short sale or a sale that we hold for a longer amount of time. So guys, I hope, and really, there's no need for me to show you guys this on the 15-minute and 1-minute frame because we won't be able to see it. Example. See, as you guys can see here, this is our chart on the 15-minute time frame. And that is our trend line right there. You guys can see on the 15-minute time frame that price is still ranging here. That is our trend strength indicator. And we're waiting for price to break above our support line here or resistance. Okay. So I, so this was just a something that I wanted to share with you guys for you to get a better understanding of what and why I place the trades that I place. And I want you guys to keep in mind that um, this is going to look different for the UK 100 and for the Germany 30 and so